Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. A huge happy 4th of July to my American viewers. Hopefully you all have a great holiday period. This is going to be our daily cryptocurrency market update, and we've got quite a lot to get through, really setting this week out for everybody. You know, it is, of course, 4th of July today, and on holidays, things tend to be very low volume. But typically, when you look at festive periods, the day after, when people kind of get back to it, the trend tends to continue. So ultimately, you guys know that we still see lower prices across the board for the crypto space. But in yesterday's video, we covered some pretty huge news. The IMF, or the Bank of International Settlements, essentially we're now looking to allow Group 1 and 2 banks to hold crypto and allocate 1% of their portfolio to the likes of Bitcoin and stablecoins. Despite the price, crypto adoption continues to thrive and excel. And that's really across the board, whether that be Bitcoin, whether that be stablecoins, whether that be smart contracts. We'll get into a little bit of stablecoin news as we see Argentinians essentially look to take refuge in the likes of Tether. I've always said I actually think that stablecoins are going to be a huge driver of the US dollar. In fact, I actually think they could really cement their status as the reserve currency, as we'll see other citizens of other countries that have a weaker, less stable currency move to the dollar. But, you know, we're really going to be sort of setting this week out moving forwards. So we'll start things off by looking at the overall market. Then we'll get into, of course, we've got inflation data coming out. I think it's on the 13th, and the expectations are coming in, or the consensus is coming in higher than the prior. You know, right now, until the Fed decides to pivot, given how we've seen crypto act as a risk asset, which is very liquidity driven. So if the markets are liquid and there's money being pumped into them, they'll do well. And obviously the adverse of that is the kind of conditions that we're in forms of monetary tightening. We'll also look at this really interesting tweet here, because we still see whales and what is referred to as shrimps, which is people that have less than one Bitcoin, continue to accumulate. The issue that we've got is miners are continuing to distribute. Now, the reason miners are distributing, and we'll get into this thread, is really, you know, something that we've covered previously, is given the price, they become forced sellers. They don't have the luxury of hodling Bitcoin because they have to keep the lights on, and they have to keep generating cash to keep the business afloat. And when you know, it's quite expensive to mine a Bitcoin, when the cost of mining a Bitcoin, the actual product that you produce doesn't cover that, you know, it really doesn't make for a great outlook for miners, and they again become forced sellers. So this is going to be a continued narrative until we see that price shift, which is really going to be tethered to macroeconomic. So let's get into it, guys. The overall market is somewhat down today. I expect it to be quite a lackluster day, given the fact that it is the 4th of July. The global cryptocurrency market is now valued at $865 billion. You know, there's a lot of money in stablecoins. You know, I was looking at this earlier. You've got $66 billion in Tether. You've got $55 billion in USDC. We've also got $17 billion in BINANCE coin. Then you've got the likes of MakerDAO. You know, there's well over $100 billion, nearly $150 billion in just stablecoins alone. That will all flow back into markets along with cash on many institutional balance sheets. But the reason people are in cash now is because it's going to pay them to do so, because you're going to get more for your cash when this market slides than you will currently having it in crypto. That's my overall consensus, why we're more heavy in cash. Sounds rather contradictory being having a channel called All in Crypto, but you know, we're mainly in stable coins. Certainly for somebody living in the UK, I'd rather hold US dollars than the Great British Pound, just because I think the dollar is going to inherently, given what's happening, continue to spike. And that's all going to be bad again for the asset class, or for your risk on asset classes like crypto and the equity market. And ultimately, we see real pain coming potentially for a very overvalued equity market that has essentially just been propped up since 2008. That may have come to an end now the Fed has kind of stepped out as its backer. So we see more downside. Ultimately, crypto is still kind of consolidating. There are some positives with where you currently are at the moment. You did have a pretty significant period of consolidation here, which actually seems to be somewhat holding. You know, you haven't actually came below this. You are holding on to this. You also have the prior high. So this is a really significant area of consolidation that you find yourselves in. And providing that you hold this, you know, it's not the worst sign in the world. But the issue is when you come below it, you've got lots of kind of hot air beneath it that isn't going to take too much to break below. So we've got the CPI print coming out on the 13th. The consensus is going to be higher. I think that's going to be detrimental for markets, just like the last CPI print was very detrimental. We did cover this with you guys. Ultimately right now, the Fed's mandate is to tackle inflation. Whilst inflation persists, they're not going to accommodate markets. They're going to choose to fight inflation over, propping up the stock market. And I got into an interesting debate on my Discord yesterday, where we were essentially talking about, okay, well, how is the midterm going to affect this? Because are they going to pivot and try and sort of prop the stock market back up for the sakes of popularity in the midterms? There is that potential, but also you've got to factor in the fact that if you think about inflation, it hurts everybody. And the majority of Americans, I think 40% of Americans don't even have $500 in savings. So they won't typically hold stocks, which means that they're going to be more subject and detrimental to inflation than they are the stock market, and they're a large part of the vote. So there's kind of two angles to that. This was a very interesting thread from Glassnode, and then we're going to be hearing from Augustus, who we actually spoke about yesterday, who is of course the head of the Bank of International Settlement, talking about the fact that money at the soul of money is trust. This is why Bitcoin was created, guys, and this is, in my opinion, the direction that the world is moving towards. We're going through monetary change. We're going through political changes, and crypto is really, in many ways, at the heart of it. I've always said Bitcoin is actually a very political instrument, but we'll get into that after we've read this thread from Glassnode. Within the extremely challenging Bitcoin market conditions of 2022, there are three entities, cohorts, with very interesting dynamics. So Shrimps is under 1 Bitcoin, are stacking. Wells is over 1,000 Bitcoin, are stacking, and miners are distributing. A thread exploring these entities. So we'll pull up the first one. A small Bitcoin holder with under 1 BTC have been adding to their balance at the most aggressive rate since March 2020. Shrimps are adding at 36k BTC per month, which is around about 2% of the circulating supply, and a 1.36x monthly increase. Shrimps now hold 1.12 million BTC. So we're going to make a point about this, because even though this is bullish news, on-chain has kind of gone out the window. Kind of like Plan B stock to flow. I actually saw Plan B. I think he's promoting Binance, Bybit links at the moment, which is interesting. But anyway, that's neither here nor there. Whales with over 1,000 Bitcoin typically go through accumulation distribution cycles, often aligned with BTC market structure. And these entities are also adding to their balance aggressively, acquiring 140,000 BTC monthly directly from exchanges. Whales now own 8.6 million BTC, which is around about 45.6% of the overall supply. But despite this, markets continue to sell off. So there's obviously more sellers than there are buyers. And we know that some of the different kind of statuses of Bitcoin holders are quite aggressively hodling. However, finally, Bitcoin miners who have who have been under immense income stress of late are in distribution mode. Excluding Patoshi, not sure who that is, and unknown miner balance is flat. Miners hold 65k Bitcoin in aggregate. Miners are distributing 3 to 5k BTC per month. So they still hold Bitcoin. The question is if the price continues to fall, are they going to have to liquidate those positions? That could be a huge cascade on the market on top of the already continued sell pressure. On-chain metrics have somewhat gone out the window, although they are interesting to pay attention to. I'm going to play this clip very, very quickly from Augustus, talking about the fact that, at the soul of money is trust. And this is, very much the future that we're moving towards. So I'll play this, then we'll wrap the video up with a couple of other news articles, and I'll love and leave you to your 4th of July holiday.
Trust in money remains the bedrock of stability. My main message today is simple. The soul of money belongs neither to a big tech nor to an anonymous ledger. The soul of money is trust. And central banks have been and continue to be the institutions best placed to provide trust in the digital age.
So I would disagree. I don't think central banks are the best placed custodials of money. And I think one reason we're in the mess that we're in, and one reason we've seen so many financial crises and so much pain across the board is as a result of central banks. You know, they are the great manipulator of markets and humanity in many ways. The money exchangers, the money lenders, the money usurers are really, you know, throughout history have you know, had a role in history. You know, they've often shaped it in many ways. So now we have Bitcoin, which is this kind of decentralized, nobody owns it, nobody controls it. It's very much set in stone monetary system. You know, it's a huge advancement for humanity that we've not really ever faced this kind of a prospect, which is exciting. But even the Bank of International Settlements, just like they said, they're going to allow people to hold 1% Bitcoin, certainly Group 1 and 2 banks. They're actually also really kind of affirming the fact that the soul of money is trust. I don't think many people trust the central banks. Argentines take refuge in stablecoins after economic minister resigns. So this actually, we've spoken about this previously. I actually think that stablecoins, certainly in the likes of the USD stablecoins, really further the dollar as a world reserve currency and adoption of it. Because if you live in a country that is unstable financially and you can't trust the currency that the government issue in that country, well, now you have an alternative through a cryptocurrency app where you can essentially, you know, swap your currency that you have that you may not trust for the likes of USD T or USDC, and know that there's a degree of safety there. And I think this is really going to further the US dollar as the world reserve currency. And we're going to see lots more of this to come. Bitcoin indicators that nailed all bottoms predict a $15.6 thousand Bitcoin price floor. You can't really call floors. Historic metrics, you got to remember that Bitcoin came around in 2008. Look at what the stock market has done since 2008. It's just essentially gone up in a, let's find 2008, which is over here. Stock markets have just gone up in a straight line. We're no longer in that sort of an environment where the Fed has your back. So to bring up historic metrics, like on-chain metrics, or like, you know, one reason Plan B stock to flow model went out the window, and one reason I was wrong on the fact that 2021 and that bull market was going to continue was because macro really has taken over and is driving everything. And historic metrics will get, in my opinion, and already have been to a large degree, invalidated. But we are looking at the 15K level. There's a number of levels that we have further on down, but we have spoke about them in previous videos. How inflation will affect Apple. So we're seeing the likes of Apple see some sort of capitulation from a number of areas, certainly in regards to the consumer. And this is what you've got to think in terms of the environment that we're in. I think we're already in a recession. Recessions are defined by 2 negative quarters. I think we've had them, which was obviously the first quarter, which I think was like minus 1 point something GDP. And I think this one was 2.1, minus 2.1 GDP. So we're technically already in a recession. But the reality of that hitting everybody is where I think we see the real capitulation come from. And I think this was a very interesting article talking about how Apple, how inflation will affect Apple. And it talks about consumer, it talks about some China shutdowns essentially affecting them. I mean, it also talks about the consumer, you know, not being as flush and getting their upgrades as often because they're trying to save money. And this is echoed across the board and obviously relevant to the cryptocurrency space. German Road Traffic Agency says 59,000 Tesla vehicles have software glitches. So this was just an interesting thing I thought I'd throw in. That is really all I've got for you in this video, guys. Enjoy your 4th of July holiday, and I'll catch you all in the next one. Ultimately, you know, there is still definitely the scope for a relief rally. We've not seen one yet. You know, certainly when you look at the stock market, it's going to be interesting to see how things open tomorrow. However, my fears are that typically when you have a holiday, if you look at festive periods, you'll see not a lot of volume take place on the actual holiday. And then typically what happens is the trend resumes when things get back to normal. And that's kind of what I'm expecting, more downside for this week, certainly moving into the CPI. And we'll see what happens around that data, as it will be very pivotal. We also got a number of Fed speakers and the FOMC meeting on, or the FOMC minutes on Wednesday, which is going to be key to watch. But I think Jerome's just very much going to be reiterating what he's previously already said. All I've got for you guys. Have a fantastic day, and I'll catch you all in the next YouTube video.